Financial Services Commentary for March the 20th, Tuesday night, 2018. I have had the opportunity here over the last week and a half, 2 weeks, to talk to a bunch of people through safe option strategies. And I'm going to have you guys to better help you understand. I want to discuss two things today that are detrimental or are the reason why people cannot trade for themselves. What do you think those two things are? And I'm going to give you a hint. It is not fear and greed. Those are usually the two big reasons, but what two things do you think? I've talked to 4 or 5 individuals here. What are the two big things that always come up when someone's trading for you or you're trading for yourself? And it's particularly noticeable this year. Not a big enough account, markets are rigged, emotions. Those are all things that I do here, or that people need to fess up to. Think a little bit more though. What have you maybe heard me say over the years when it comes to a one-day move in the market? No plan. So Mod, that's more in line. Maybe there's no plan, but I'm just going to say lack of patience. And I'm going to follow on your lead there, Mod. Lack of patience to follow through with a plan. What do I mean? This year, I've talked with or know of 6 to 8 people who left Safe Option Strategies or the market in general over 1 week's worth of trades. So I'm going to go ahead and I'm going to give an example. Poor Jeffrey Dunyon with Safe Option Strategies has some people up here. Well, the last couple of weeks, I think we've had some volatile weeks. He has, in fact, I'm going to jump course here. I just heard someone say, I'm guilty of that one. I've been trading for 10 years. I've been trading for 15 years, and I still do that. So literally, past 3 weeks have been difficult. I know Jeffrey's had some trades that haven't worked the way that they had planned, but today those trades are profitable. And it's amazing because when you're looking at a system, when you're looking at a program, when you're looking at trading, do you ever judge yourself over 1, 2, 3, maybe 4 weeks? Do you ask someone, so what's your weekly return? What was your monthly return? Most of the time, the question is, and I'm going to say, doesn't matter what a week, month, or quarter return is. We ask, what are your yearly returns, right? That's what we ask. We don't ask someone, so what is your weekly return? And literally, I am shocked at some of the people that I've spoken with. Yearly. We ask, what are your yearly? That looks right to me. So kind of different. Kind of shocking that people jumped in the end of January. In fact, if I can go down to my chart, jump in. If I can go into the chart, why don't I put the charts in here? Jump in And I'm going to go ahead and I'm actually going to use, don't necessarily want to use the Dow, but they jumped in the end of January. Is that hilarious? How many people do you think jumped in at the high at 26,600 there? A lot of people. A lot of people said, man, look at this chart. It's run up. They get in right there. It's Murphy's Law. They have an up day, and then the thing tanks from 26 down to 23.4. So if I do a little bit of math here, I guess I didn't realize it kind of fell that much, but 26.6 minus 23.4 is 3.2 divided by 26.6. 12%. Wow. I didn't realize that. Of course, that's the bottoms there. But could you imagine the poor person that got in here and got out right there, lost 12%, and then said, the market's rigged. I'm done. I give up. I'm out of here. And they watch it go back up, and they get in here, and the next day it's down, so they get out, and comes up, and they get in here, and 2 days it's big down day, and they're out. And they go through the month of February. They go to here the middle of March, and they say, screw it, I'm done. Shoot me. And then it comes down to, well, you know, it's Jeffrey's fault. He didn't teach me well enough. Hey, I made a mistake and I learned from it, and I'm just not cut out for it. There are so many excuses, but what it really comes down to is usually it's a little bit of patience. It's a little bit of patience, and you weather the storm. I'll be honest with you, if I was to look at the Dow chart right now, I would call it bearish. We obviously have our 5 and our 20, but the MACD is on itself. So if I was looking at the MACD anytime, and you've seen this the last couple weeks when it was right here and right here, when it's flat like that for the MACD, I bring in the Williams percent R. It's like a median stochastics, and obviously crossed over bearish, but looks like it's going to head back up and at least test the median line, which could be the 50-day simple moving average. So as I look at the Dow, I would definitely tell you we are in a bearish time right now, and the Dow, well, and I wouldn't be necessarily looking to invest more money right now. I'd be looking closer to earnings, which are coming up here in about 2-3 weeks. If I was looking at the S&P 500, again, you'll see I've got that MACD touching. We don't have a signal. It might be laying on itself again where it's done for a couple times. So don't necessarily have a confirmation. Gotta love those earnings. I do, Daniel. Good point. You don't exactly have the confirmation. I do see bearish in the Williams percent R again. So I'm going to tell you it's bearish. And the big one that's kind of really rocked some people's worlds here recently, we bring in the NASDAQ. Not only do you have a non-discernible sign on the MACD, you also have it on the Williams or on the RSI. I'm obviously going to tell you it's in bearish territory because you just have it there on the Williams percent R, but it looks like it's turning. You'd get your biggest confirmation, although I don't even know if the 5 and the 20 would do it. So it's uncertain. I wouldn't even give you a bearish call on the NASDAQ. It is just uncertain right now. So when I'm taking a peek at these type of signals, I don't think it's the best time to be putting new money to work. But with that said, if you've invested in the last 6 weeks, I don't think the market's rigged. I don't think that you don't understand how to trade. I don't think it's a fair way to judge a system or yourself. We ask ourselves what annual returns are. In all honesty, I've had some people that I've lost right at that year mark, and it was 2 days later that Visa, we picked up 30% more shares of stock, went from 220, 215 to 275. And I sat there and I said, you screwed up. Way to suffer through all the pain and miss your big run up. Very politely, actually, I had a conversation with someone here recently that asked me, and to his credit, Kevin, what do you think we should do? And I said, well, in all honesty, I wouldn't change anything. I wouldn't do anything different than what you're currently doing. Well, but things haven't worked out. And I said, again, you're judging yourself over a small period of time. And I think he was even talking about, well, what would you do? I've been in it for a year. Great. If you've collar traded, why suffer for a year? Why pick up 20, 30, 40% more shares of stock and not wait around for the bounce? I am shocked at people that I know Murphy's Law got in right in this range here, suffered through this, and said, you know what? Your system doesn't work. Safe option strategies doesn't work. You didn't make money penny for penny in the downturn. And I think to myself, you idiot. The market's never going to be a place for you because of the mentality or the lack of patience. Is killing you. And I'll be 100% honest with you. You need to be patient right now. It is not easy. It is not fun. It is extremely difficult. But I would not suggest that you judge yourself, a program, a system, over a week, 2, 3, 4, 5, 6 weeks. The key is, how do you weather the storms? How do you weather? If you don't mind, I'm going to use the Dow because it's more fun. Look at how this changes. Boom, to a holding period, to a down, 12% intraday, to up, to down, to up, to down, to jiggly, to up, to down. It's not fair to judge yourself, or for that matter, the safe option strategies, advisory, anything. It's just doesn't make sense. So as I sat about what I want to talk to you about today, please don't judge your returns or your success off of the last 6 weeks or even year to date. Weather these storms so you can get through them. And again, I had a very candid conversation with an individual I'm learning to really respect. He is also a fisherman, but in shrimp. What would you do? And as we had this conversation with me, what would you do? I sat there and I said, if you've been in it for this long, weather the storm. In fact, I think I've had 2 conversations with people here. Why would you weather all that pain and pick up shares and miss the ride back up? Well, Kevin, what if it never comes back up? Great. As it continues to fall down and go out of business, some point in time as it breaks the support level, double your shares, double your contracts along puts. just like BS did, Bear Stearns, right? I had 3 contracts of long puts on Bear Stearns. And as it was frozen and went out of business at 362, I was buying shares. In fact, if I can tell this story one more time, Kevin was put $1 million in Bear Stearns. I was like, you got to be kidding me. 109, paid dividends for 153 years, some ridiculous number like that. I don't remember exactly what it was. Put it to work. And I said, no, I need to buy protection. As I bought shares of Bear Stearns at 109, I couldn't even protect until it was down to 100. So imagine 909,000 in BS. Bear Stearns, right? And then 90K for long puts at 100 strike. And not only that, not only did I miss the first $9 down, not only did I miss the first $9 down, but it cost me some ridiculous amount of money, like 13, 14 bucks for those long puts. Hey, it's fallen through 80. I need more protection. Bought a second contract at 80. Asked for more money to put in the account. Didn't get it in. Protected it at 40. And I still remember the conversation. Kevin, how much money did I just lose? Did I just blow $1 million? I said, well, we got in 109. Cost $13, $14. In all honesty, I specifically remember we lost $23 a share. I've never seen someone so happy to lose $230,000 in my life. But hey, don't worry, Phil, we're buying back into Bear Stearns tomorrow. And you could have heard the cuss words come across the East Coast over to the West Coast. Kevin, you bleepity bleep bleep mother. Bleep 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 bleep. Hey, I'll talk to you tomorrow. Sorry. See you later. Don't you dare, you bleepity bleep 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 bleep. Next day, had to buy in. I had to have the shares because it was a frozen stock. All the options were frozen. You couldn't cash them in. You could only exercise and assign. Exercise the right to sell at 80 at $3.65. And again, I think the 80 ones cost me like $28. It was ridiculous. But we were profitable. Called me up. I don't know how you did it. How do I have over $1 million in my account? How does this work? I thought my account was frozen. Yep. You're good. Hey, I'm going to buy into Bear Stearns tomorrow. Kevin, you bleepity bleep 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 bleep. I was like, oh, you couldn't have learned. You didn't understand. Bought again at 362, exercised at 40 at the close of business. And yes, you can be profitable in a stock that goes out of business. You just have to double your puts in some way, shape, or form. Lack of patience. Investing is difficult. It's why I get paid to do it. The second thing I wanted to go over, and it comes really close to it, expected returns. I usually hear this on monthly income, which is garbage, which is a farce. 100% returns. Day trading. And I'm actually say day trading / futures / forex / commodity trading. I have yet to see 2 consecutive profitable years in a row. And that's with speaking at a dozen money shows and offering $2,500 to anyone that would be willing to open up. This is other professional traders that would open up a screen, a portfolio, and show me 2 consecutive profitable years. Never happens. They've got a period of time, a quarter, maybe a year where they got ridiculous return. A 1,300% return is one of the ones I remember on day trading. Yet the next year, didn't lose nearly as much, but still lost half his portfolio. You can have a 1,300% return, lose, a 60, 70% the next year, and be less than where you started with. I'm not saying there aren't people that are not profitable in day trading, futures, Forex, commodity trading. I just thought I said community trading there for a second. But it's really hard, or to have those expectations, to do it consistently. Really, the toughest years to sit through that first year as you pick up shares and waddle through a stock collar trading. And boy, that second year is where you see ridiculous gains on collar trading. I think it's pretty funny or interesting. Monthly income. I have seen it so many different times where expected returns kill people. I've got to have X amount of dollars. I'm retired. I'm bought a boat, a home. I need to live off of fixed income. And what happens is that first month they don't get there. So they go into debt, which means the next month they now need to make twice the amount of returns. And if it's something kind of stupid like 5%, they now need to make a 10% return in a month on their money. Anyone know what the S&P 500 historical average is? I think this goes after World War II. What's the deemed historical average rate of return on the S&P 500? There you go. I would agree with you, David. Historical S&P 500 average yearly return, 7.75%. And you can technically push that to like 9.15 if you take the historical average of 1.32 or 1.34 percent of dividends, which the S&P 5 pays out. So if the S&P 500 on a yearly basis pays out 7.75%, if I ask this group, is it realistic to expect a 10% return a month? Of course not. Thank you, David. Daniel Mott, appreciate it. No, the answer is no. David, if you don't mind, I'm going to, since you've kind of wrote a couple things in here, no, hell no, not a chance in hell. So obviously hell is your theme today. And if I'm touching on a sore subject, you know what? I shouldn't laugh. If I'm touching on a sore subject, David, I'm going to apologize right now. So obviously the second month, they don't make it up, but they could still have a good month. But maybe they only make a 3 or 4%. So now they need 6 plus 5. And on month 3, they blow up a portfolio going so directional with so much risk. And it's one stupid day. It could sometimes be one stupid stock right now, like Facebook. No, I'm not a big fan of Facebook right now. What's really bad is Facebook is killing me. Well, Kevin, you're protected. So on a day like today, I'll be honest with you, stock lost 4.41%. I made up 275, another 77 cents. 2-1. I'll make up 352. So on a day like today, I lost 89 cents. I lost 89 cents on Facebook. Come on. So minus 0.89. On a day like today, you know what? I look pretty good. On yesterday, though, son of a gun. Yesterday, I didn't add any short calls. In fact, what happened was everything got called away on Friday, expired, took profits, whatever I was in those positions. So I was looking for a Monday, a bounce back Monday, where when you see a big sell off or any sell off on Friday, especially with options, you normally have people with money that come back in on Monday. Well, nothing like having Facebook open up $7.30 to the downside. So I started off with a shorter term April short call. It was down around $8. I said, you know what? I better go longer term. I better go get a bigger credit. Went out for a bigger credit, and heck if I needed it. I guess heck if that wasn't a great call. And then it started to breach 175, so I'm now down about 950-ish, 972 or 3, I think was where it was at. And I said, dang it, I've got to add some long puts on. So on go the long puts. Knowing I'm going to get crushed in volatility. Might as well go out to May. Might as well make sure that I'm out past their earnings. And look at these suckers go down to 168. Anyone know where the next stop will probably be on Facebook on the way down? Where's our next stop going to be on Facebook? For you fast typers, you know what? Maybe I don't see that though there, David, at 155. I'm probably looking at we had the 200. Thank goodness it held the 200 today. But I was looking farther out, and I was going to tell you 150. Let's see if I am correct or wrong. So, Dave, you're saying you're counting right there. So maybe, 54, 55. I can see where you can make a justification there. I was going on the gap, and I was going below that. I was telling you a round number of 150. But you can make a case for the 155. So I'll give that to you, David, possibly 155, but I'm going to tell you a round number of 150. And if you ask me, this is another, I would call this another Costco news-driven drop that you'll see a rally come right back. I think you're going to see on Facebook exactly the same thing that we saw in Costco, which means I am looking to add some January 19. When you see Costco go down through this drop, but it was this drop, the 180, coming back up. Way overblown, way ridiculous. Because Amazon's going to do Whole Foods. I hate agreeing with the guy, but let's give it to Jim Cramer. Is anything that they're talking about right now hurting current subscriber base? Is anything that's going on right now hurting current revenue? Have you heard any businesses pulling out on their advertising on Facebook? Will it matter outside of the United States for new subscribers? It shouldn't. It really shouldn't. I'm kind of seeing an opportunity on Facebook where I hope it came down to test the 160s today. I would suspect 155. I'm going to call 150. But we get down to 155, I'm going to start adding some long calls on. I'm going to go leap long calls. I'm going to go all the way out to January 2019. Out of curiosity, there are only 17 of us in here. Does anyone think Facebook can't trade back up at 195 in the next year and 9 months? Anybody here think Facebook can't trade back up at 195 in the next 1 year and 9 months? There we go. Someone just typed in, I think it can. A couple of you typed in higher. Most likely, yes. Probably higher. I'd agree with all 5 of you. How hard is it right now to call Facebook a buying opportunity? I can't call it a buying opportunity yet, but I'm going to go ahead. I'm going to keep following with Mod here, but most likely this will be a buying opportunity here around 155 to 150. And Rich just typed in 9 months, right? I even think I'm going to give it a year and 9 months. I'm going to go way out in time. I'm going to go buy some 150 leap long calls where volatility won't affect it, but to the upside to benefit it, where volatility crush won't affect it, where these knee-jerk reactions won't affect it. Right now, I'm in that. I've got some leap long calls in Bank of America and Visa. I finally ended up taking some profits on Visa. And for new money that came in, just using profits, I kind of want to treat everyone the same. Boy, I think Visa right now at the 125, 130, excellent opportunity for 15, 16, 17 bucks to go add some leap 2019 January long calls on Visa. Visa on a valuation metric should trade above 200 within the next 12 months. To pay 15, 16, 17 bucks, even 18 bucks right now for on a valuation basis with their second revenue stream coming in Europe with higher interest rates coming. Well, Kevin, higher interest rates could mean more defaults. It could, but it usually means more profit for someone with all their fixed income right now, their fixed business, not income, their fixed business expenses. No brainer. I also like Bank of America. Cheap. You could get into some 35 leap long calls on Bank of America for cheap right now. I would definitely be looking at some possibilities there. It's super hard in the moment to see the opportunity. And again, it comes down to usually a lack of patience in your expected returns. For those of you that are are clients of mine. You've heard me say this. I can't guarantee you a return. What I can guarantee you is any of the downside movement that I make up for you is profit when things come back. I'm never going to tell someone, you know what, you just got to tough it out. You just wait for it to come back. I had someone that just yesterday I picked up money for him. Kevin, you better not tell me just to ride it out. That was the word, ride it out. And I was like, no, I'm going to tell you to wait for it to come back as I make up downward movement, as I add shares to your position. I won't tell you to ride it out. Primarily because that's not the verbiage I would use. But it's much easier to write it out on Facebook with protection in place, with making up some of the downward movement, with having a plan in place as we fall to some expected lows. If I was going to ask you about this week, what's happening this week and why, as I blow right by it, what's happening this week and why, we have one other event that's significantly important for us. Tomorrow, the FOMC rate meeting, rate decision. Good thing I can't type worth beans with Powell for the first time. We raising interest rates tomorrow? Already had it raised in January, right? We're raising interest rates. So Maud says yes. So that means in a year we're expecting 3 interest rates. We're going to go through 2 of them right now. First time he's out there. Daniel says probably. David says yes. Mary, you've been quiet today, but thank you. Mary says she doesn't know. It is somewhat expected, but I'd be honest with you. If you want a president that wants easy money, if this is your first meeting, expectation is 3 rate hikes a year. Usually when it comes in December, because you get a little bit of Christmas rally and it offsets an interest rate bad news. I'll be honest with you, I don't know, but I'd probably tell you, no, we're not going to have one tomorrow. Might be the spark per President Trump's request to get the stock market going back up. It would not surprise me if we did not have a rate hike. And for that reason, if you ask me, and primarily it's a technical bounce, horizontal support, I'm expecting the market to be higher going through the end of the week. The catalyst will be the rate hike meeting. On the Dow, horizontally, we're seeing to be at a support level. Horizontally for the S&P at 2,700. And not only that, but we've got the 50-day to support us for the NASDAQ. I still think we're going to end March down 2%. Out of curiosity, I want to take a peek at a chart. S&P. We finished around 27. So we're not really down for the month on the S&P, but I do think we'd be down 2%. So I wouldn't surprise me to see us go down to the 2650. I'd like to change that, but I don't know exactly where we ended. But I want to tell you, we probably ended, that's March 1st, so we probably ended March right there, which is at what? Roughly that 2718-ish. I will expect we will probably see some sell-off through tax season. The sales that didn't occur last year that people wanted to lock in this year that need the money. I would expect us in April to have a sell-off. No real big earnings. FedEx, I thought, was today. General Mills tomorrow. KB Homes, Micron, Nike on Thursday, some bigger ones. Economic reports, nothing really big. FOMC rate decision tomorrow. Leading indicators, durable goods, nothing that really moves us, nothing internationally. So with that said, I'm dipping in. If you ask how I'm looking to trade, I mentioned it last week. I somewhat agreed with Jeffrey. I'm trying to do a couple little spread trades, maybe just for some high net worth individuals. Those with over $1 million, we've got some R-hat trades in or some request for maybe a little more aggressiveness. I'm sure that was mentioned to me back in January. They don't feel the same way today. Investors just jumped the most money in the stock market fund for a single week. I have this dating back to a couple days ago. Interesting article for you guys to read. Why does the U.S. have a trade deficit and what caused it? It's something interesting again for you guys to read. And Warren Buffett rejected his entrepreneur's dinner invitation, but he did give her 3 pieces of advice. The 3 pieces of advice: before you go to sleep each night, ask yourself, are you smarter? Have you learned something new? Always pick up the phone. In life, there'll be so many things you want to run away from, but you should always confront them head on. Be humble no matter how high you rise. With that said, any questions, guys? Any questions that I could spend some time with you today that I was trying to hopefully bring across to you? It's okay to maybe not have your beginning of the first year go the way you had planned. And I also think it's it's smart for you to broaden your time horizon for your expectations on your returns. But any questions you have for me today? David, Kevin, what's your next best stock pick? I think I just told you my next best trade. Again, I'm going to go back to Facebook. Facebook is, I think, has a big opportunity, especially if it'll break that 200 day. It'll be a no-brainer around 155, 150 to throw on, and I'll leg into it, throw on some, I guess ladder into it is the way to say it. Put on some January 2019 leap long calls, couple contracts, and if it goes up to 155, maybe throw a couple more on. Maybe try to get myself up to 10 contracts, but knowing 10 contracts could be a $20,000 investment. You know what? Interesting comment. Thank you. Daniel's made the comment, are you as good as a trader as you are a fisherman? I'm probably a better fisherman than I am a trader, but I think fishing is a lot easier than trading. So it's an acquired art, but I think it's pretty safe to say I am probably a better fisherman than I am a trader. The neat thing that I can tell you, Daniel, is that in 2004, I was able to trade myself into a portfolio that I now am more comfortable collar trading than options trading. And again, it's nothing more than taking less risk and not needing to take the risk that's involved with spread trading or leap long calls. I also made it through 2006, which was a ridiculously bullish year. August through December, easy way in 4 months to get 150% return on $25,000. I don't take those same amount of risks now because the money means more to me. I've got more, it means more, and I'm in a state where I'd rather have great returns with a lot less risk than great returns with a lot of risk. And that risk is not, the risk is, what's the word I'm trying to find here? The risk is is time risk to where an option just doesn't move in the time period that I need to. By collar trading, I no longer have to worry about it anymore. I no longer have to worry about the timing of being right. I just have to be right eventually. So if that makes any sense, let me know. Sorry if you guys heard a little bit of that in the background. Any other questions? Well, guys, I will not see you next week, but thank you for being here. I will tape something and record it for you. Check your emails. There'll be a link to the YouTube, and I'll do the best I can, or a link to the website to watch it. I'll have the notes emailed off to you, and I will see you in 2 weeks, which is my kids' week off, but that makes it easier so I don't have to drive around everywhere. Guys, I appreciate you being here. Have a wonderful evening, and I look forward to seeing you here again in 2 weeks. Bye-bye, y'all.